Alright guys, welcome back to the channel. I wanted to do another video just on how really the coronavirus, and not just the coronavirus, but really talk about how these certain events happen and create a wave in the market, and how people take advantage and how people get driven out of the market. So I had a lot of comments on the last video that I did on this and how I was able to capitalize, and this week, on the market open this week, and into Monday, and then finishing up on the Tuesday, early hours of Tuesday morning, I had the best trading session that I've ever had. So I was able to generate almost, just over a third of my average income, my average annual returns in that basically 6 hours of trading. And I'm going to do a full video on that because I think it'll be very, very valuable for you guys to just get an insight into the process of that. I'm going to be talking about how I approached it, why I did what I did, and my returns, and all of the trades, the amount of money that I earned on each trade, and how being a personal best for me, how that affected my emotions, and how I kind of handled all that. So I'm going to do a whole video on that. So make sure, if you're not subscribed to this channel already, be sure to subscribe to that because that'll be coming very soon. But this video is more about how these events really cause ripple effects in the market that go on for some time, in fact, triggering a recession, and what's at the root cause of it, and how people come out of it, and who takes advantage and who doesn't, and what it looks like in the end. So first thing you have to realize is, I put a post on Twitter saying the concern is the main thing causing the concern. And what I meant by that is it's not the actual virus that's causing the mass market downturn, the mass market panic. It's not the actual virus itself, it's the reaction to the virus and the precautions that people are taking for the virus. So, for instance, we've seen flights be cancelled. The flights aren't cancelling. Like someone said the other day, well, why would they cancel a flight just because, why aren't they cancelling the flight because of the common flu? It's not the flu, it's not the virus. The flights are cancelling because of a knock-on effect of someone else cancelling something and then someone else cancelling something. So let's just take an event, for instance. Let's just say that you're going to a convention, and because of the virus, people start panicking and they say, well, I'm not going to go to a convention because there's going to be loads of people there. And then the convention centre says, well, we've had loads of people drop out, so we can't hold the convention. And then the flights that were flying people there are going, well, we can't fly there because people don't want to go to the convention. And then the taxi service is going, well, we've got no one to take to the airport, so we're going to lay some taxi drivers off. And it's this big ripple effect. It's not the actual virus, it's the reaction and the panic and the widespread common kind of actions that people are taking in panic mode that cause the mass destruction of the economy. So when we look at the charts, if we look at a chart, lots of people have been looking at charts this week thinking that they know what the charts are saying. When you look at the charts, I always say this, that is a graphical representation, but it's not a graphical representation of the number, the rate, the unemployment rate, the death rate, the bank rate, the tragedy, the disaster. It's the virus. It's not a representation of that. What it is a graphical representation of all of the market participants' reactions based on their own thoughts and beliefs and opinions and fear and greed and what they think's going to happen. And because that's the masses, right? The masses drive all this stuff. You're going to see a graphical representation of that. So it's not the actual virus that you're seeing a representation of. It's the emotions of people reacting to that. And what people are doing are causing this big pile-up effect. So if you think of a motorway, okay, let's just say we've got this big motorway here, and on the motorway, we're tearing down the motorway in our cars, okay, here's the cars, these are cars, and we're doing 70 miles an hour, okay? As the cars are flying down the motorway, the first car just decides to slam on his brakes, okay? Slam on the brakes for whatever reason, they know there's something on the road. Now, what will happen is this car will slam on the brakes, this one will slam on the brakes, this one will slam on the brakes. And then as we get back here, what's happening is they're all basing reactions on the first driver here who decided to slam on his brakes. Now the front driver might have done that because there was something on the road, okay? Now the billboard might get put up and it will say some obstruction, right, on road. And what people will see on that sign is, oh, is it a animal? Is it a moving obstruction? Is it debris? Is it a tree? And they won't know what it is. So all they're doing is basing their actions on the drivers in front. And the only driver that knows the truth is the one at the front. So as we're at the front, this is the moment of truth here. Okay, let's do this in a different color. This is the moment of truth. And then as we go backwards, this is wider and wider and wider and wider hearsay, beliefs, thoughts, opinions, everyone's opinion getting injected into this. And all of a sudden you've got a ton of different opinions, different actions. Some people are, okay, braking hard. Some people don't want to brake, they swerve. And this is causing chaos. This is what's happening. But it's only because the driver broke that it's caused this standstill. You know what happens on the motorway when everyone starts braking? You come to this standstill and it kind of looks like this, right? The speed goes down and down and down and down until we get to this standstill. And then it takes a while for everyone to start moving again, doesn't it? You see the cars pulling off slowly and you kind of see this action again. And then it goes faster and faster and faster until we get up to 70 again. But that takes a long time. And this is what we call a recession. This is the recession where the market stands still because of this reaction in the market, because the reaction of the participants. And all the while, this thing that caused the driver to brake is gone. It didn't even really cause any problems. It was the driver that broke that caused the problem. So going back to what I said about the businesses, let's just say, if you're running a taxi service and you're at the back of the queue, or an airline, you're going to be cancelling due to someone else in front of you cancelling. You're going to lose business because of your decision to shut down because of that one in front of you. The person behind you is going to struggle or shut down because of your decision based on the decision of someone in front of you. So you can see how this can really cause a problem for businesses, right? And what you see is this all the time. This is the recession. This is why we talk about generating leveraged income, investment return income, trading income, digital asset income, online business, right? Passive income streams, income that doesn't require you to be in a certain place on the planet, income that comes in regardless of where you are on the planet. You're not relying on being open at a certain time. You're not relying on a certain demographic. You're not relying on a certain geographical location. You're just generating income regardless. What typically happens in these recession times, here and here, is these businesses will struggle. Let's just say these are businesses, right? Biz. Let's call this biz. These struggle and struggle and struggle until they need bailing out. They either go bust or they sell their businesses at bargain basement prices, or they need help. And that's where the investors come in. They've saved the cash for the crash. They've got the money. They chuck a load of money into a lot of businesses. Okay, might be one, might be two, might be a handful of businesses waiting for the traffic to start again. Okay, and then they ride this wave. So they get in right down here at cheap price, and then they let the business thrive again in the booming markets, as we do, and they capitalize. So the masses control because the masses are driven by fear and greed and kind of, they're running around with this kind of animalistic mentality. The masters sit there and they're poised and they're waiting and they're ready and they prepare for this stuff. And they know that human innovation will always evolve. We'll always come out of it. And they just have to sit and ride the wave. Now, what I'll say to you is this. I talk about leveraged income streams. Imagine launching a business right now, okay, and having to rely on hosting a load of events around the world or around in your country or in the different cities or your city, and you've just launched a business and you've built this thing based on in-person workshops. If you're relying on in-person workshops for your entire income, you're going to be very, very stressed right now, because you've got to go and hope that people want to be in a room, which they don't. People are going to want to travel, which they don't. The travel companies are going to still be going. Otherwise, they're going to be paying premium prices for the travel companies that are still running. The taxi services are running, the planes are running. Anyone wants to even leave their house, okay? And it boils down to the fact that you're not really in a position to start going out and running a business, running in-person workshops, because you haven't done your research. You're not prepared for this. No one wants to do this. And what I see this is time and time again, people want to launch these businesses, these physical businesses with huge overheads, and they just really want to do it just to be in a room with people, just to kind of have a room full of people. When in reality, people don't want to go to that. People don't even want to attend those events. People don't want to leave their house. People would rather do it in their own time. And if that's what they want, my advice is this: put it online. Don't let your ego go, right? Develop it online, develop a digital version of it, sell it for cheaper but to more people, and you're a winner, right? No overheads, no time. It's far more wise to charge a lower price, have a lower price point product and sell it to more people than it is to try and sell a high price product to a few people. Trust me. Much more sustainable to build a product that you can serve many, many people with at a lower cost. It's more likely to sell, it's more likely to make you profit, and it's more likely to be a sustainable income than it is to try and build something very, very high value and then try and sell that to a few people. You'll be banging your head against a wall, particularly in this climate. It's done. So even my advice is this: if you're in business, move as many touch points of your business online right now. If you're not in business, or you've got a job and you're trying to, think about the future of your job, think about leveraged income. What can you do at your job where you can do it much quicker but get the same result? What can you delegate? What can you invest in that's going to provide you a consistent return, and how can you build on that? What skill can you learn to develop leveraged income streams? What skill can you develop to generate semi-passive income streams or passive income streams? If you're not thinking in terms of that, you're not going to be able to ride the next 5-10 years, as all of the people that are on the wagon with that are going to clean up. So that's it. It's a little bit of a rant for this video. Hope you enjoyed it. If you've got any comments and you want to start a conversation on this, put your comments below and I'll get involved in the conversation there. If not, share it around. This is definitely a video that people need to hear, particularly with that analogy with the traffic. I think people will understand it more when I use these kind of analogies. Share it around. If you enjoyed it, give it a like, subscribe for the next video where I'm going to be sharing with you my best trading week ever, which was in 6 hours. And until next time, have a great rest of your day, and I'll see you then.
Everyone wants to live an inspired life, yet so many people search for happiness following the footsteps of peers and taking advice from people who have different values and outcomes to which they're searching. There are people born into wealth, graduated from the best universities in the world, and there are people who have none of that and yet are living extraordinary lives full of fulfillment and reward. The purpose of this is to share insights and strategies that allow you to question the status quo and think freely, so you can design your life and be who you want to be. We get one life. Time is our most valuable asset. I believe that when we're free and able to focus on meaningful work, we become better human beings. This is always free, and I'm your host, Jason Graystone.